It is no secret that organizations in the crypto industry have often clashed with authorities, with Ripple's current lawsuit vs. the SEC being probably the most noteworthy example. However, the SEC is now suing even larger people in the crypto business. Binance and Coinbase, two crypto juggernauts, have become the latest to dispute with us authorities. The SEC filed lawsuits against the organizations within a day of each other. The SEC charged Binance with 13 counts, including deceiving investors via insider trading and hiding assets. Notably, Binance and its creator, Changpeng Zhou, have been accused of operating Binance in the United States against prohibitions imposed by the government. The SEC has accused Binance of continuing to enable select high-profile U.S. investors to utilize its platform. Furthermore, Binance, a portal designed to act as a crypto exchange with no links to Binance, has been discovered to be owned by the global crypto exchange and Zhou. Through 13 charges, we allege that Zhou and Binance entities engaged in an extensive web of deception, conflicts of interest, lack of disclosure, and calculated evasion of the law, SEC Chair Gary Gensler stated. As alleged, Zhou and Binance misled investors about their risk controls and corrupted trading volumes while actively concealing who was operating the platform, its affiliated market makers' manipulative trading, and even where and with whom investor funds and crypto assets were custodied. They attempted to skirt us securities laws by announcing phony controls that they ignored behind the scenes in order to retain high-value U.S. customers on their platforms. The general people should exercise caution when investing any of their hard-earned funds with or on the illegal sites. Binance is not the only company in the firing line. Not barely a day after the news of Binance's lawsuit leaked, the SEC stated it will also sue Coinbase. The cryptocurrency trading platform was accused of operating as an unlicensed national securities exchange, broker, and clearinghouse. Coinbase was also accused with failing to register the offer and sale of its staking as a service product in the United States. The SEC's East case, filed in the U.S. District Court for the Southern District of New York, claims that Coinbase and CG violated the Securities Exchange Act of 1934's registration restrictions. Furthermore, it implies that Coinbase violated the Securities Act of 1933's securities offering registration regulations. Injunctive relief, disgorgement of ill-gotten earnings, plus interest, fines, and other equitable measures are sought in the case. What does this signify for the industry as a whole? Because the complaints were filed so quickly, the fintech sector was caught aback by the news. We talked with industry professionals to learn what they think these cases signify for the industry's future. Gasper Stitt, marketing director at the cryptocurrency exchange Zonda Crypto, examines the effect of the litigation on each firm. Despite Coinbase's plans to establish a non-use company overseas, Stitt emphasizes that both Coinbase and Binance have robust operations in the United States. As a result, the litigation might have a long-term effect. The lawsuits, along with the SEC's actions in the U.S. and MiCA approval in the UE, are evidence that regulatory pressure on the crypto industry is tightening. He added, the long-term consequences of these operations may extend well beyond the United States, as a rising number of authorities seek to probe crypto-related firms. At the same time, customers are becoming more aware of the risks associated with utilizing services offered by corporations that do not bother to alter their operations to comply with legislation. As a consequence, customers will become more selective, only spending their time and money in firms that are regulated in their market. All of this should assist the crypto business in the long run, since everyone, particularly new investors, will profit from a more regulated market. However, it is important to ensure that the laws reflect the unique character of our business rather than being a carbon copy of the financial sector. Otherwise, it may stifle crypto. Experts in the cryptocurrency community have been debating recent business developments, particularly the SEC's move to prosecute the world's two largest cryptocurrency exchanges, Binance and Coinbase. In case you missed it, the SEC filed a lawsuit against Binance and Coinbase in less than 24 hours, charging that both exchanges aided the trade of crypto assets branded as securities, therefore violating federal securities law. The action has prompted discussion among cryptocurrency fans. Top cryptocurrency specialists claim in a series of tweets that the regulator's crackdown is tied to the Commission's investigation against California-based software startup Ripple. Yassin Mobarak, founder of Dizer Capital, believes the SEC's campaign on the two biggest cryptocurrency exchanges demonstrates that the agency is afraid of losing the Ripple litigation. He warned that the SEC's failure in the Ripple case might result in a precedent-setting verdict against the agency. The litigation against Binance and Coinbase, according to Mobarak, is the SEC's approach of speeding its major effort to isolate its likely defeat against Ripple. As a result, the SEC might claim that its defeat against Ripple was restricted to the facts surrounding the XRP case and not relevant to the broader sector. Interestingly, popular cryptocurrency writer Zach Rector suggested that the SEC is close to reaching an agreement with Ripple. Rector did not provide any other information on the proposed settlement. His statement, however, comes only an hour after the SEC formally sued Coinbase. Furthermore, another crypto proponent using the alias Baba said that the SEC's recent crackdown on exchanges indicates that the Ripple litigation has been settled. The crypto enthusiast pointed out that the SEC would not have pursued its complaint against Binance and Coinbase if its case against Ripple was still ongoing. Ashley Prosper, an XRP community member, said in response to the current developments that the SEC's decision to pursue Binance and Coinbase does not imply that Ripple lost its summary judgment. He emphasized that regardless of what transpired in the Ripple action, the regulator would have still sued the exchanges. Furthermore, Prosper said that if Judge Annalisa Torres had previously given a summary judgment in favor of the SEC, the Commission would have used a portion of the order in its lawsuits against Binance and Coinbase. The Ripple case, in my opinion, is over, and the SEC now needs to go full steam ahead to get Gary Gensler a clear win before 2024. I believe the winner will be Binance and Coinbase will be fined. Prosper continued. It's worth remembering that Judge Torres has yet to rule on the Ripple lawsuit's summary judgment. The decision is anticipated at any time. Some XRP supporters think the parties will likely settle before Judge Torres delivers a decision. Ali Martinez, a cryptocurrency expert, highlights the increased XRP network activity as a positive indicator for the cryptocurrency's price trajectory. Martinez's findings, based on sentiment data, show a significant spike in the creation of new addresses on the XRP pipe chain, a traditional indicator of impending price increases. This new oddity in address formation has piqued people's curiosity in recent days. Today, a leading cryptocurrency news portal first reported on this strange behavior in late May, citing Sentiment's finding. The address creation surges have been significant, ranking second and third in the history of XRP address activity monitoring. XRP's value has increased by 11 in the previous week alone. However, it is currently facing severe selling resistance at the critical 54 cents level. Overcoming this obstacle is critical to achieving the next target of 6 cents. Whether the price will truly rise, as Martinez predicts, remains to be seen. XRP, famed for its ability to defy market trends, has caught the curiosity of traders and investors once again. While some see this as a positive indication, others remember the token's turbulent history and remain suspicious. The important issue is whether this significant increase in the XRP network will translate into a significant price surge or whether it is just another false beacon of hope. Concurrently, the imminent publication of SEC's William Hinman's emails has sparked interest in the XRP community. In preparation, the SEC has prominently deleted portions of Hinman's biography from its website. This has fueled conjecture among XRP supporters that the SEC is planning to distance itself from Hinman ahead of the email's publication. The aforementioned communications are crucial in the current SEC EVs. Ripple litigation. Following the SEC's complaint against Ripple for breaches of US securities laws, Ripple sought access to drafts of Hinman's 2018 speech in order to improve its fair notice argument. Hinman defined Bitcoin and Ethereum as non-securities in his remarks, but he did not explain the legal position of XRP. Despite the SEC's efforts to conceal these papers, a judgment issued last month denied their application. The unredacted emails, as well as other summary judgment evidence, will be made public on June 13, 2020.